And we're live, everybody. Welcome in. It is Tuesday, November 14th, 2:30 p.m. Central. Thank you so much for joining me. I hope you had an excellent Monday, and welcome to Tuesday. I hope your Tuesday is excellent as well. For today's video, I want to cover Tesla specifically, and I also want to dig a little bit into their AI side of the business. It's starting to pick up a little bit of attention from the investing folks, I would say. Before we go any further, none of this is investment advice. None of it is financial advice. It's just commentary about where the company is going amidst not just the whole automotive sector, but some of their further on plans. And one of the things I'm noticing is that there's starting to be a little bit of a recognition of some of Tesla's long-term potential from a company perspective and in other technologies than just cars. It's specifically artificial intelligence. I want to pull up one of the voices that has been the loudest around Tesla's AI. I'm not going to play the video, but I just want to give you a little bit of background, even though we'll click watch again and we'll let Kathy go there for a little bit. Kathy Wood from ARK Invest. They've been following Tesla's AI story very closely for a long time. And they've been one that has been chiming in on the story for a while. They keep saying, hey, Tesla's AI is going to be great long term. It's going to be valued at, I don't know, thousands of dollars per share, which would be significantly higher than when we are now. But they've been consistently around this notion. They've been the key drivers of driving this from an investment perspective. Now, in case you're not familiar, Tesla has been working on an AI solution for their vehicles where they take a bunch of video, and here's like a sample video from Tesla themselves, where they take a bunch of sample video from their cars as they're driving around, and you can see each one of these situations has some weird stuff going on. You got freaking trees falling everywhere. You got I don't know, freaking dust storm or smoke in the middle of the road. You got a bunch of debris flying around. You got a freaking light show that the car is driving through. And this is just to showcase that, hey, Tesla is trying to collect as much video as possible so that they can have a self-driving solution at some point in the future. And that's how they're doing it. They have about 5 million cars on the road, and they're collecting all this data so that the car can drive itself in the future. And ARK Invest has been one of those companies that's like, yo, this is going to happen. This is going to happen. And Tesla keeps pointing us towards that direction that, hey, we're training a bunch of stuff from a computer perspective. Here is a graph that shows that they're about to effectively 10x or more their compute power over the next year or so, which is going to allow them to process more of that data at once. But where this is a little bit interesting nowadays is that there's more voices coming to the fray. So now we have a piece from investing.com. This came out earlier today, sometime this morning. Goldman Sachs, and forgive the title, I think they made a boo-boo on the title. Nobody's perfect, or nobody's nerfect. Goldman Sachs sees Tesla as a potential leader in AI-related tech. That I don't think that is supposed to be there. And this is a Goldman Sachs who's kind of like I don't know, think of him as a bank and an analyst firm, kind of all in one, that is starting to recognize this potential. I'm going to pull out some of the stuff that they're saying from the article, and I want to sort of analyze that a little bit so I can really describe how these companies are thinking about it, but also where the missing potential could be as well on top of that, because I think it really just highlights how game-changing this is. And it's cool to see more and more people talking about it because it becomes a question of when, not if. So let's go ahead and read a little bit of the article. The analysts from Goldman Sachs expect Tesla's leadership in the AI segment will help the automaker to expand businesses like FSD, which is their full self-driving, in particular for the company's own fleet of vehicles. And I'll talk a little bit about that as we go into the analysis. Goldman Sachs believes that their current $235 price target for the stock reflects Tesla's future potential for growing in new high-margin areas, particularly concerning its own fleet. When they say high-margin areas, what that means is places where you can make a lot of money on a technology for very little cost as compared to, say, I don't know, a printer. A printer, you sell it at a loss and you make money on the ink. That's one way of thinking about it. They suggest the company, in this case Tesla, may gain more product traction in other segments before potentially ascribing additional value to FSD licensing or potentially providing Dojo as a service. And Dojo is Tesla's in-house sort of chipset that they use for AI training. And so the thought process is, hey, Tesla could rent this out. But they're saying that there might be other opportunities as well before FSD and this AI portion comes in play. If Tesla successfully seizes these opportunities, Goldman Sachs believes the market potential could be substantial. And here's where the numbers get interesting. And this is what I really want to focus on for this video. We believe in an upside case, so in an upper range, like a maximum potential. FSD could be somewhere between $50 to $100 billion a year of revenue from Tesla's fleet by 2030, up from what we believe is $1 to $3 billion per year right now, presently, wrote analysts at Goldman Sachs in a note. And shares of Tesla are up about 3% in early trading on Tuesday. And if we look now, they're somewhere around 6%. So, and again, this is not investment advice, it's not financial advice, it's just commentary, but I don't know if these two things are correlated. This is probably much more, and again, this is just nobody freaking knows, okay? But this is probably more closely correlated to the good inflation data we got from the markets, which is really helping every stock, not just Tesla. But let's go ahead and analyze that a little bit, what Goldman Sachs is saying here. $50 to $100 billion a year of revenue from Tesla's fleet by 2030. And so the thing we have to get our heads wrapped around is, what is Tesla's fleet likely to be by 2030? And if we take Goldman Sachs numbers, what does that mean from a fleet perspective? Well, like, what does it actually mean? Let's quantify and try to picture what they're actually trying to describe in terms that we can understand, or hopefully we can understand. So there is a post that was from Martin Viecha earlier today, who's the investing relations manager for Tesla, basically the head of IR, the head of investor relations. And he wanted to sort of clear up one of the things that's going on with Tesla's future growth. So what he said specifically, and this is to a group of investors very recently, is that we're between two major growth waves. The first being driven by 3&Y platform, which is their more affordable vehicles. They start around 38,000 since 2017. And next one that will be driven by the next generation vehicle, which is going to be this $25,000 compact car and other cars that come from that platform. And all of this is to say that Tesla is very much going on their plans to reach, say, multi-million units per year long term. Their long-term goal is about 20 million per year by 2030. A lot of people are sort of doubting that's going to happen, but there's a lot of consensus that the 10 million per year number is likely in reach given their current trend and their plans with this affordable car. And so if we take those assumptions and we say, okay, so Tesla is thinking somewhere around 10 million units per year delivered by 2030. What I want to do now is I want to take those numbers and start doing some math and say, okay, if we take Goldman Sachs assumptions, what does this mean from a fleet perspective? So if Tesla reaches the 2030 number of 10 million units per year, this implies that that Tesla is going to have somewhere around 40 million Teslas driving around in the world. Right now, they have about 5.5 million. They're going to finish the year with about 1.8 million units sold this year. And if we just fast forward, and what I did is I basically did some math at 28% compounded annual growth rate, which is the average growth that they would need to get to 10 million per year. You can kind of see how each year they sell more and more, which makes the fleet go higher and higher. So by the time you're at 2030, you've gone from about 5.5 million cars today to about 43 million cars in 2030. Now, if we take Goldman Sachs numbers and we say, okay, so what they're saying right now today, they're making about $1 million or $1 billion in revenue per year from full self-driving. And if we assume that they have about 5.5 million units in the fleet, this means that they're making about $182 per fleet unit right now in 2023, basically. It's just one very simple way of thinking about it. Tesla's making about $182 per car out there from full self-driving, from the AI stuff. And then that 182, if we put some sort of multiple on it, so that's one way of saying, hey, what is the stock market likely to give you from a multiple perspective on how much money you're going to bring in? This means that it's going to add about $50 billion of valuation to your company's stock. If we go back and look at Tesla's stock right now, it's about $237 per share. But really, what we really want to focus on is the market cap. So $750 billion or so. So what Goldman Sachs is kind of saying is that, hey, right now, full self-driving is doing about $50 billion of that valuation, we believe, based on how we are valuing the company. Okay. So if we fast forward to 2030 and we take their lower range of that upper band, which is the $50 billion per year that they're going to be bringing in revenue. Now, before I go even any further, the reason why revenue is kind of counted as profit in this case, which is what we're going to use for earnings, is because it's software. All Tesla has to do is basically turn on the switch for for their full self-driving capability for their fleet, and all that money they're going to charge for full self-driving is going to go to essentially the bottom line or as profit, because there's no other moving parts to turning on a switch when you're giving a car, say, self-driving software. It's just a software update, right? And so that revenue can also very directly fall into earnings, and that's what everybody expects to happen because it's a very high profit margin business, just like Goldman Sachs described earlier. So if we take that $50 billion per year margin or revenue number, which is essentially all earnings, and then we divide it into what the fleet is likely to be by 2030, your full self-driving per profit per unit goes from about $182 to about $1,100. So what Goldman Sachs is saying here is that, hey, not only are you going to benefit from a fleet that's going to be likely, 9 to 10 times bigger potentially if Tesla reaches 10 million units per year by 2030, and of course, if they're able to solve full self-driving, it's going to correlate to about $1,100 per car that Tesla sells is going to come from full self-driving. $1,100, which is 10 times more than today roughly, but is $1,100. So think about that for a second. It's like, okay, so if cars can now drive themselves, does it make sense that Tesla's fleet is going to generate about $1,100 of revenue from cars that can drive themselves? I'm just asking the question. I don't want to give an answer right now, and maybe I won't. But so if you slap that same price earnings multiple of 50, which again is relatively reasonable for a company that's still growing their revenues from software-like margins, then the market cap becomes about 2.5 trillion or 2,500 billion, which is obviously significantly higher than the 50 billion that the Goldman Sachs says is about where it is right now for Tesla stock. It goes up to about $2.5 trillion. Now, this is using Goldman Sachs assumptions. And again, none of this is financial advice. I'm just describing what they're saying, okay? What's really interesting about this, though, is that number one, obviously, if Tesla is able to solve full self-driving, you can see that based on Goldman Sachs guidance, the stock's going to go from about a $750 billion stock to a $2.5 trillion stock, which if I do crappy math real quick, it's about 3 times higher than where we are today. However, what I want to show you now is how this potential doesn't just stop at 2030, because we're talking about software here. We're talking about basically sales of a piece of software that can go to Tesla's existing fleet that can generate more more money. So if we just assume that Tesla does the same exact thing every year after 2030, which is just they sell 10 million units per year, and they have about the same percentage of cars that are out there that have full self-driving generating money, then you can see that because their fleet is getting bigger, right? It's going from 43 million cars to 53 million cars by just selling another year's worth of cars. And then in 2032, you do the same exact thing. You sell another year's worth of cars, years worth of cars. You just keep doing exactly the same thing. You can see that Tesla's earnings potential go up from about $2.5 trillion from a market cap perspective up to about $5 trillion in about 5 years, right? So basically the valuation of this company, as long as all this stuff remains the same, essentially doubles with Tesla just doing exactly what Goldman Sachs thinks they're going to do. They just keep making 10 million cars per year. And I think this really highlights how game-changing this is for the auto market. Traditionally speaking, when you have a car, you have to upgrade to the new car, right? When is the last time you've bought a car, specifically a gas car, that you buy and you're like, wow, this thing's getting better every year? That's one of the disadvantages that gas cars have nowadays, where they can't benefit from software that can make it better. In Tesla's case, their goal is to say, hey, the farther along we go, the more we want our cars to drive themselves, the more we want our cars to be able to generate profit for us. And so then it ends up generating $5 trillion of market valuation in about, say, 10 to 15 years by just Tesla doing the same thing year over year and by simply just growing their fleet. Okay? I hope that made sense. If we do a little bit of math on that as well, just to kind of give you a little bit of the, oops, I went the other way. If we go on hide, perfect. Just to give you a little bit of math on how Goldman Sachs is thinking about this. If we say Tesla's full self-driving, their cars are going to drive about the same distance as a taxi driver, which is about 40,000 per year in the United States. And we assume that Tesla is going to charge about $1 per mile for this robo-taxi fleet, this fleet of self-driving cars that Tesla is going to be able to make money from. And say Tesla takes about 20%. So 20% Tesla keeps, 80% they give to the fleet provider or the person that's willing to put their car on the network. This means that on a yearly basis, Tesla is going to be able to make about $8,000 of profit per year. And if we look at Goldman Sachs 2030 sort of vision of their fleet of about 40 to 50 million cars, this means that about 14%, if we just look at their profitability numbers and just extrapolate out from this math, this means that about 14% of the fleet in 2030 will be generating full self-driving revenue, where the cars are driving about around about 40,000 miles per year. So I'll just say it again. For us to get to that $50 billion profit per year for Goldman Sachs, what Goldman Sachs is kind of assuming is that there's going to be about 40 million Teslas on the road. About 14% of them are going to be operating as, say, a full robo-taxi. And those 14% could potentially get us to that $50 billion number. Just some rough math, just to kind of help you understand how Goldman Sachs could be thinking about this. However, what I really want to sort of talk through now is like, okay, so this is how Goldman Sachs sees it. I'm wondering if there's an opportunity for us to also kind of think about some other different ways of thinking about this using Goldman Sachs math. And this is where the whole potential of full self-driving and artificial intelligence really starts taking into effect for companies like Tesla. So if we assume the same profitability, let's say, but instead of 14% of the fleet, it's running full self-driving at the same miles per year as a regular taxi driver. So instead of 14%, we go to 20%. It goes from about a $2.5 trillion valuation to about a $3.5 trillion valuation in 2030. And if Tesla just keeps doing the same exact thing year over year, just keep adding 10 million cars per year for 5 more years, that number, again, kind of doubles from $3.7 or $3.5 trillion to market cap at 50 price earnings to about 7.5 trillion market cap just by adding cars to the fleet, if 20% of them were to run full self-driving. If, let's say, half of Tesla's fleet runs full self-driving, and the reason why I say half is, okay, now you have a company that's allowing folks to run robotaxi networks where the cars can drive themselves, right? What is the likelihood that half of Tesla's fleet is going to be running on full self-driving, driving around 40,000 miles per year? I don't know what, it's probably low, but in case that were to happen, given how game-changing the technology really is, you think about it, a car that drives itself, there's no driver, it's not going to crash, it's going to cost a lot less because you don't have to pay a driver, right? Just think about those things. Then the numbers start to get really wacky, right? So if half of the fleet was to do what sort of Goldman Sachs thinks Tesla can do from a profitability perspective per car, then you're adding about $8 trillion of valuation to the stock by 2030. Or this is where the numbers get stupid. That's why I said don't take any of this as investment advice. I just want to paint a picture of how Goldman Sachs is thinking about this. Then 2035, you have about 18, 19 trillion dollars of market cap that's added if 50% of Tesla's fleet is on full self-driving. Now, let's run through another scenario. If, let's say, instead of 40,000 miles per year, you're doing about 80,000 miles per year because you're a self-driving car, you don't have to rest. Theoretically, you can just drive around like crazy, right? You don't have to take a nap. You don't have to do anything else. You can just let the car do its thing. You just have to charge. That 40,000 miles per year averages to about 100 miles per day. So 40,000 divided by 365 days, it's like 110 miles per day. What's the likelihood that a self-driving car can drive, say, 200 miles per day and be active in those 200 miles. 200 miles of driving straight through on a highway is about, what, 4 hours-ish, depending how fast you're going. So, city driving, you probably have to double that to about 8 hours. And then you assume, okay, so 16 hours of driving, and then you're charging for some of it, you're picking up passengers for some of it, right? So this is like a potentially realistic scenario. But if that were to happen, and we assume that it's still 14% of the fleet, then market valuation goes to about 5 trillion in 2030. And again, it doubles to about 10 trillion if Tesla just keeps selling 10 million cars per year. It doesn't do anything but just grow. And then if we get really, really crazy, and then we say, okay, these full self-driving cars are being utilized 80,000 miles per year because there's no driver, there's no rest needed, and about 20% of the fleet is being operated instead of 14%, which is where Goldman Sachs kind of is landing here. Then again, your numbers get even bigger, about $7 trillion of market cap in 2030, about 15 trillion in 2035. And then the super insane scenario, 80,000 miles per year driven from a self-driving car at 50% of the fleet being on full self-driving, driving around 80,000 miles per year, $17 trillion market cap by 2030. And I don't even want to say that number. 37. Crazy, right? And what's crazy about this is just to kind of paint a picture of a story that's hard to believe or hard to describe, because it's such a game-changing technology that I think a lot of people for the last few years have been very scared of touching it, especially from the investing world. They've been very scared of touching it because of an exercise like this. The numbers are stupid. These numbers, like if somebody tells you, hey, a stock is going to be $37 trillion potentially because they're solving for full self-driving, most people are going to be like, yeah, okay, sure. I'm sure it's going to be, sure, right? They'll look at you kind of crazy. But when you just sit down and do some math, there is a path to get there, right? And it's obviously super heavily dictated on what the market is going to price that potential at. And it's obviously super dictated also by the company actually solving for full self-driving. But what I'm happy to see is that there is starting to be a little bit more momentum around more and more folks thinking that this is a possibility, thinking that this is actually going to happen. Because for the longest time, it was very much ignored. It was very much ignored. And so what I'm going to be looking for the next few years is to see if the chorus of voices starts becoming louder, starts to actually recognize that, hey, this is not just like a pipe dream. It's actually something that the company is working towards. It's something that should be recognized because it's right now having an impact on people's experiences with the vehicles. I own one myself. I use full self-driving very often. And I know a lot of people that do as well. And so if this version 12 release from Tesla works and it actually gets Tesla to a place where they can start turning on full self-driving in the coming months and years to be used as a robotaxi network, then mathematics like these are going to be taken, I think, more seriously. And again, I'm not doing this to try and convince you to do anything. This is just a commentary on how Goldman Sachs is thinking about it and why a lot of folks are afraid to touch this. It's because the numbers are crazy. The numbers are crazy. But if you found this helpful, give me a like and a subscribe. Drop me a comment below and let me know if you think about what you think about this video. And we're not even talking about the Tesla bot, right? I almost forgot to show you this thing, the Tesla bot. This thing that's supposed to be solving for humanoid robots is going to be using the same exact thing as the car. It's going to be using the chip. It's going to be double check everything yourself. Just pretend I'm a crazy person. I just find this stuff insanely interesting. And yeah, it's super exciting to think about. So let me know if you enjoyed the video and we'll see you in the next one. I love you very much. Take it easy, everybody. Bye-bye.